Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective for the 5th of September 2014. It's trading. Okay, so basically what happened today, situation with regards to ECB, BOE, okay, so Mr. Draghi certainly fired his bazookas today, okay, with an interest rate cut plus ABS. ABS is I'm still trying to dissect ABS at the moment, okay. The arguments of it being QE and no QE, the arguments of the Germans such as Mr. Wiedmann, obviously not happy with the decision, and apparently Mr. Draghi's own words, some agreed, some did not agree. So I'm still doing some work on that, okay. I think that's going to be the clue. If you can read between the lines with regards to ABS and QE, I think you're going to have an edge in this market. So that's certainly a work in progress. As soon as I get my grasp of it and an understanding of it, then I'll certainly update yourselves accordingly. Okay, so with regards to the ECB, okay, so my main concern is the price of gold. Okay, if ABS is considered to be QE, or a lighter version of QE, as a lot of commentators are trying to explain, then surely the price of gold should go higher, because obviously excess money supply, or increasing the money supply, creates inflation, and gold is an inflation hedge. That wasn't the case. As you can see here, initially when the news was announced, there was a spike, and then obviously after we dissected and we digested, or we, should I say, market participants, okay, have decided that this isn't positive for gold. So that itself is a warning sign, given the fact also that US markets obviously sold off and failed to continue and propel higher. Again, is another warning sign. So and also given the fact that the FTSE didn't follow through, even though you can blame it on BP, but having said that, Standard Life was keeping the FTSE higher in the morning. That's certainly an anomaly, an isolated equity. But having said that, then US markets should technically have followed through, and this is exactly what we got. We got initial euphoria, excitement, short squeeze, catch up to European markets, and then obviously one hell of a sell-off down to 1990 level, and the 1990 level remains key on the S&P 500, as we all know, because it equates to previous resistance equals support. So 3-bar consolidation, yes, we may well get the 4th bar reversal, but from my perspective, that certainly doesn't bode well. Okay, so that's something that we'll have to take into consideration with regards to global intermarket analysis. So for now, it's a real conundrum. Also, given the fact that the Nasdaq was exceptionally weak as well, given the fact that you've got Dow Transportation and Dow Industrials both are into resistance, and if you look at their 60-minute charts, certainly do not bode well. A bull flag failed. So, and obviously given the fact that we've held that 17,150 resistance level, the next move does look as if it wants to go lower. But again, given the fact that Mr. Draghi obviously has stated that this is going to be the end of the rate cut cycle, so no more rate cuts now. Europe needs to get used to the euro being around the 1.29 level, etc., etc. So there's a lot of dissecting to do, a lot of analysis to do with regards to the market at present. I'm just going to give you share my thoughts and my thought process right now, but certainly a lot of divergence. So obviously Europe is diverged today from the US. One could argue that Europe was actually caught up to the US, and whereas the US markets have obviously sold off. So given the fact that we had a rate cut, and given the fact that obviously we had the ABS program announced, not underway, and obviously we still have yet to see exactly how much that will be in value. Some say 300 billion, some say 200 billion. So again, it's all up in the air, and obviously we need more details to clarify and confirm that in order for us to base a trading decision upon. The other argument that you can argue with regards to European markets is that it was already factored in. That's one thing that you could certainly argue, that yes, the markets are already factored in, given the fact that obviously all other US markets had retraced more than 75%. 75% and gone to the previous highs, and obviously one could argue again with regards to Europe that we are still within that 75% fib and still below. So and also given regards to the other factor as well, is that obviously we've got the Minsk meeting tomorrow, and there is news with regards to Mr. Poroshenko and Mr. Putin obviously are confirming and signing a ceasefire. So that's another argument you can, and you can certainly state that okay, the European markets were higher mainly due to the short squeeze of confirmation of the truce. So that's the reason why they caught a bid as opposed to US markets which sold off, because their interpretation of Mr. Draghi's QE was disappointing. They were disappointed and they feel that that's not going to propel or help the European market in any way. It's only QE outright rather than ABS, which is a lighter form of QE, which again the details certainly seem to be vague right now. So there's a lot of explanations from a fundamental perspective. I don't really want to go into it in detail, but that's the sole reason why the markets obviously rallied. Now let's go back to the FTSE 100. So the FTSE 100, okay, yes, our European partners are doing well. The US markets did not do well. Asian markets did do well overnight. Okay, emerging markets are into resistance. If you bring up a chart of the emerging markets, as you can see here, into resistance, into weekly resistance. If you look at the US dollar index as well, which I've just posted a chart, again, weekly resistance. So it certainly seems like a lot of divergence in the market. Okay, so let's just go back to our technicals and see if our technicals can shed some light and try and cut through the noise and tell us exactly where it wants to go. So basically the FTSE 100 is at its weekly chart resistance, so key resistance obviously on the weekly chart. On the daily chart we're into our horizontal resistance. We've put in a topping tail doji based on obviously BP news, given the fact that it's the lawsuit or basically the news went against BP today, and the share price was dropped quite drastically. So let's bring up a chart of BP. As you can see there towards the close, that's one hell of a sell-off, from 485 down to 450 region, etc. So let's just see exactly where this wants to go. As you can see with regards to BP, I mean, this doesn't bode well, because you can clearly see here you've got a HNS formation. Okay, so if I just delete all these other S analysis, and what does it want to do? It wants to close the gap below. We're almost there now. Let's just have a look at this. So yeah, not too far off the 450 region, and potentially even lower. So just bear that in mind. So HNS formation here, the head was around the 527, your neckline is around 570. You're looking at around a 50-point drop from 470, so you're looking at 420. So this certainly has more further room to fall, and I expect the FTSE obviously to fall in line with that. So that doesn't bode well for the FTSE 100. Okay, now let's just have a look at the sectors first with regards to the FTSE. This is going to be quite important. So let's have a look at the banking sector first of all. Yep, so daily chart, bring up the banking sector itself. Certainly quite stellar performance there. Obviously with regards to the rate cut in Europe, obviously is helping the banks, apparently, so that's their interpretation of it. So certainly bullish so far. No real resistance in sight, so banks certainly bullish, although you do have an unfilled gap below, so watch out for below. Okay, so banking sector, one can't argue that it's into bearish territory. The mining sector now, bear in mind also, given the fact that we've got the dollar index into resistance, although we have closed the gap, the mining sector certainly has this gap fill resistance around the 17,600 level, and lower lows, lower highs continue. So buying still remains bearish for that, obviously, with regards to the mining sector. So just bear that in mind. So that certainly hasn't got a bullish stance right now. Let's have a look at a daily chart. Daily chart, gap fill resistance seems to be the key. Obviously we've broken this mini HNS and down we go. Okay, so for the mining sector, given the fact that iron ore price and copper price were down today as well, that doesn't bode well. The oil price, as you can see, due to BP, quite a substantial drop in the oil sector, oil and gas index, and that obviously doesn't bode well. So that certainly will, and given the fact that the FTSE 100 is heavily indebted and heavily weighted towards commodities, and that doesn't bode well for the FTSE 100 going forward. Okay, so bear that in mind for tomorrow. Okay, so certainly early pressure from the outset on the FTSE. Now with regards to the retail sector right now, as we can see, we've had quite a substantial rally. The HNS obviously failed there, that I'm explaining there. Okay, so with regards to the retail sector, given the fact that the US markets are under pressure, and we do seem to have a HNS formation being obviously in motion here, what you can also do with regards to the retail sector is cross-reference it with the retail sector in the US. And also with regards to the CRBQ, that's something else that you certainly need to focus on. So let me just drag this over here, expand this. This is the CRBQ index. Okay, the CRBQ index certainly doesn't bode well, although we are, I mean, as you can see here, CRBQ H&S formation, you can clearly see, but we are into support, okay, for the CRBQ. So that's something that's certainly worth bearing in mind. Okay, although the 200 MA certainly looks as if it wants to be tagged, and that's something that we need to focus on. But bear in mind the US dollar index is certainly into resistance in the weekly chart. So if it's into resistance in the weekly chart, then if it's into resistance in the weekly chart, then that doesn't certainly bode well, does it? So that's something that we need to keep an eye out for as well. Okay, so watch out for that. Okay, but again, I'm not going to go into too much hypothetical scenarios for now. The retail sector certainly seems, especially after the topping tail, certainly seems to be into resistance, so that doesn't bode well for the FTSE 100. Which other sectors have we got left? We've got the pharmaceutical sector. Yes, a double top resistance for the farmers, so that obviously doesn't bode well for the FTSE 100, as you can see. So that's certainly a negative scenario for the FTSE itself. And let's have a look at our building and construction again, which is quite crucial and quite key. And as you can see here, we are into a potential resistance zone here. This is your horizontal resistance there, and then you've got previous resistance here as well. So certainly doesn't bode well on the daily chart, so certainly into resistance. Obviously we've closed this gap, certainly pushed higher on stronger data today. We did have some stronger data out of the UK, and the market certainly seems to be propelling higher, and also mainly due to the ECB's potential rate cut. Obviously the housing building stocks generally get a lift from there, from Europe. Okay, so yeah, certainly into or approaching resistance. Any further move higher into the 4100 will be into resistance, so that will certainly put a cap on the FTSE itself as well. Also with regards to the data out of the UK, certainly does, especially with regards to sterling, sorry, that certainly is coming into potential support for sterling. So if sterling is coming into support, then that does indicate the FTSE itself is topping out as well. So let's just bring up a chart of sterling to show you. So if we go to our weekly chart first of all, and as you can see here, previous resistance equals support, so this is a key support region here on the weekly chart. If you look at your daily chart, certainly the bearish channel, obviously quite a substantial sell-off today, mainly based in the euro. Was it based to sterling weakness? I wouldn't say no. I would not say it was sterling weakness. It was more to do with European weakness. That's what caused the FTSE to obviously sell off quite substantially. Well, so sterling to sell off quite substantially. So basically we're into this zone now. So this zone here is certainly heavy support. I expect a potential bounce, given the fact that we've had quite a magnificent a magnanimous sell-off on the sterling. So again, sterling coming into support equals FTSE into resistance because of the inverse relationship that exists there. So certainly keep an eye out for that, folks. Okay, that's going to be very crucial, very important. You can always cross-reference the sterling strength with GBP JPY always. That's very important. If you look at a GBP JPY chart, that certainly doesn't obviously look bullish to you at all. It still remains lower lows, lower highs. But we are coming into potential support scenario here, so watch out for this. Okay, so this is your three bottoming tails here. Watch out for potential support around this zone. Okay, again, now if you look at our GBP CHF chart, that again you can cross-reference the support level there. Okie dokie, so GBP CHF obviously had a bullish engulfing day, so that's certainly an early warning signal that you'll see strength in the GBP USD. So keep an eye out for that. And also, one of the biggest catalysts for sterling to rise now will be the Euro GBP. Euro GBP will certainly start to propel lower, given the fact that obviously we've cut rates and the ABS plan is on the table, which obviously ultimately does dilute the currency itself, and has obviously substantially diluted it. So that certainly doesn't bode well for Euro, but certainly helps Euro GBP move higher if Euro GBP is moving low. So bear that in mind, okay? That's going to be an interesting trade as well going forward. So that's basically where we are with regards to the overall intermarket analysis perspective. Doesn't bode well. Let's have a look at the FTSE 250 FTSE 250 still remains weak, did not propel higher at all. So again, that's a warning sign that obviously sterling strength or into support will hurt the FTSE 250. The FTSE 350 again, topping tail doji candle, very similar to the FTSE 100. So again, indications of weakness there. Let's have a look at the FTSE 100 itself, given the fact that, remember, bear in mind that the US markets have obviously sold off and are quite substantially overnight. Okay, so that certainly indicates bearishness. Asian markets were weak. The European markets obviously short squeezed higher on number one. Talks of peace or truce in Ukraine and Russia. And obviously the situation with regards to ABS and QE. But again, one can argue that's all factored into the markets already. Okay, so basically, where are we now? So 60-minute chart, we're in this bearish engulfing candle, remains in control. We've got topping tails above, upward sloping trend line certainly holding resistance, so indicating exhaustion, potential weakness, potential reversal in the opposite direction, and that's basically where we stand from that perspective. Okay, so yep, so certainly some sort of call it a contracting wedge, call it a rising contracting wedge, call it topping tails, call it dojis, call it a reversal. Okay, so certainly doesn't bode well in terms of price action. So no higher highs here whatsoever. If anything, we've now started to make a lower high, and now we've got a potential H&S formation, and this is basically what we're trading right now. So your head is around the 6905, your neckline is around the 6870, 6875. Projected 30 points lower, so you're looking at 6845. You're looking at the gunfill gap below at 6825. You've got 200 MA support around the 6850 region, so 6850 will certainly be the initial target for now. 6840 possibly if we do get any more bearish news, and obviously if this peace treaty etc talks don't go as planned, then obviously expect the FTSE to sell off even further. But with regards to BP alone, that should take us down to the 6850 level, if not lower, and bias remains bearish from the outset. Okay folks, that's my interpretation of the market so far. Again, like I said, with regards to the ECB, it certainly remains open to multiple